Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
This week we have 4 interesting webinars only for you. The first one is All Weather Investing, one strategy for every market by Samyukta Vibhu. That is at 10 am. And on 10 am we also have Kodishwari, a special women only webinar by Lakshmi and Archana in Tamil language. 11 am we have Corporate India Result Update webinar by G.R. Balaji sir. And finally at 12 pm we have Ask M2W Anything About Health Insurance webinar by insurance specialist Archana and Swagat. Go ahead and register now itself and we will see you on Saturday.
What should you do if the Fed cuts rates today? By midnight, we'll have a good sense of what the Federal Reserve is thinking about in terms of policy actions as well as where the US economy stands. Until then, there's been a lot of speculation about what the Fed will do, but broadly, market participants are expecting a rate cut of at least 0.25% or maybe more depending on what the data tells us. From the Fed's perspective, they have a dual mandate, which means they have to look at both price stability as well as maximum employment. Now, over the last couple of years, the mandate has solely focused on bringing price stability into the US economy because inflation went out of control. In 2024, the focus has been more evenly balanced with the Fed looking at the labor markets as well as price stability, and we've seen significant progress on the inflation front, as well as some deterioration in labor market conditions, which is what is prompting market participants to expect this rate cut. Now, when a rate cut happens, there's a lot of dialogue about whether this is good or bad, because at one level, it's going to stimulate the economy, make the cost of funds much cheaper, and that could fuel risk assets, which is what we've seen in the last few years, especially during COVID. But on the other hand, if we look one step deeper, it could actually show us some troubling signs of what's going on in an economy and how the recovery may not be so swift, and that bounce back might actually take time, which means that money could actually flow into safer assets, and very weak labor market indicators could actually spook FIIs and push money out of emerging markets or even risk assets towards safe haven assets like gold or the US dollar. So these are trends that we'll need to watch out for. The important thing being that if you see the Fed cutting rates, it's actually a signal for you to take a more cautious and measured approach in your portfolio construction and look at how you are going to manage risks on the global and domestic front very effectively. If you enjoyed this video, subscribe to our channel. Let us know what you think about the Fed's actions in the comments below.